Welcome to today's section. Today we'll be looking at forms of trading orders in the forex market. We'll also be looking at some examples on how these orders placed. But before I start, please do me the favor by hitting the subscribe button, hit the bell icon and give thumbs up. Don't forget to leave comments on any question that you may want to ask. I'll be happy to respond to them. So without wasting much time, let's get to the concept of the day. Now, forms of trading order. Now, in forex trading, various types of orders are used to enter, exit, or manage position in the market. Now, each order type serves a specific purpose and provides traders with different options for executing their trades. Now, let's look at the forms of trading orders. We have market execution, also known as what? Instant execution. So with that one, as soon as you click the buy or sell button, the trade will immediately be triggered. We will dive into that in the next part soon. Now, the second form of trading order is pending orders. And this pending order, we have various types. We have the buy limit order, sell limit order, buy stop order, sell stop order, buy stop limit order, sell stop limit order. Or as a trader, you may not be using all of them. Mostly you will be using market execution and buy limit and sell limit and buy stop and sell stop. Most traders don't use the last two, which is the buy stop and sell stop limit order. Now let's take them one by one. Sorry, let's take them one by one. The first one we look at is the market execution. Market execution is a method of executing trading orders at the current market price. Current market price. So trade is executed at current market price. When you place a market execution order, you are requesting an immediate execution of trade at the prevailing market rate. This means that your order will be filled as quickly as possible at the best available price in the market. Market execution is commonly used in forex trading and is particularly suitable for traders who want to enter or exit position quickly without any delay. So here, that means the market has come to your price, your point of interest, where you have done your fundamental and the technical analysis, and you've realized that yes, where price is, I want to buy or I want to sell. So at that moment, when you click the buy or sell button, you are doing market execution. So your broker will quickly place that order and execute it for you. Now let's look at some examples of market execution. So with this diagram, you could see that where price is currently is shown here. So this trader is into a buy position, setting a stop loss here. So instantly as you click the buy button, you are in the market, predicting that the market will go to the upside. So this is an example of market execution. We are in the trade instantly. Now let's look at the sell aspect. The sell aspect, where the price is, you click the sell button, quickly you are in a position to sell, predicting that the market will drop to the downside. So this is a picture or a sample of market execution or instant execution. Now let's look at the pending orders. Now pending orders, also known as pending trades or entry orders, are types of orders in forex trading that are used to enter a trade at a specific price level in the future rather than at the current market price. So the focus here is specific price level in the future rather than current market price. So you place an order that is pending, telling your broker that in the future when price goes to your point of interest, they should place an order for you. Now, these orders are preset instruction to open a position when certain conditions are met. Now, pending orders allow traders to plan and set up trades in advance based on their analysis and trading strategies. So your trading strategy will determine the type of market order or trading orders that you want to use. Now let's look at types of pending orders. The first one we'll be looking at is buy limit order. It is a pending order to buy a currency pair at a specific or at a specified price below the current market price. So you place an order that is pending to buy a currency pair at a specified price below the current market price. Now, let's look at the sell limit order. It is a pending order to sell a currency at a price, at a specified price above the current market price. So let's look at the examples of each of them. So in the image or in the diagram, you can see that at the buy limit order, we are saying that a pending order is placed. A pending order is placed to buy a currency pair at a specified price below the price, the current market price. So you see in the diagram, but the price is moving towards downward. But you have done your analysis and realized that price will come to this level and move to the upside. So you are waiting for price at this point to enter into the market. So you place your order, buy limit order, in this direction that price will come here and go to the upside. Now let's take the sell. So the sell limit order is saying that you place a sell pending order at a specified price above the market current price level. So looking at this, you see that price is rising to the upside, but you are waiting for price at this level, that when price gets to this level, it's going to fall. So it is just an opposite of the buy limit order. So the buy limit and the sell limit are just opposite of each other. Price has not gotten there yet, but you have done your analysis and you predict that price will come there and reject to the opposite. I hope that that is clear. Now, let's continue with the pending orders. Now we have buy stop and sell stop. Now, the buy stop order, it is a pending order to buy a currency pair at a specified price above the current market price. Above the current market price. And the sell stop order is a pending order to sell a currency pair at a specified price below the current market price. So let's look at an example of them. Now, when you take the buy stop order, we are looking at this diagram here. Now, your analysis tells you that the price is going to pull up to this direction, to the upward direction, but you don't want to buy at this level. So you set an order on the way that when price is coming to the upside or is moving to the upside, they should place a buy for you at this particular price to the upside. So that is what it is saying. The pending order to buy a currency pair at a specified price above the current market price. So you see the order that we placed here is above the current market price. So whenever price gets to this level, that is when your broker will execute the trade for you. Now, the same thing applies to the sell stop order. Sell stop order. It is a pending order to sell a currency pair at specific price below the current market price. So it's just opposite of this one. Let's look at the example. So you see this one, price is coming to the downside, but you don't want to sell at where market is currently. So you are waiting for price along the way, that when price get to this level, your broker should execute a sell order for you. Your broker should execute a sell order for you. So this buy stop order and sell stop order are just opposites of each other. You are not buying at current price level, but you are expecting that when price is moving to the upside, you buy along the way. I hope this is well understood. Now, let's look at the other types. So the other two types, we have the buy stop limit order. Buy stop limit order. A buy stop limit order combines elements of a buy stop order and a limit order. It includes both stop price and limit price. When the market reaches the stop price, a limit order is triggered and the trade is executed at the limit price or better one. Now, it is used to control the entry price after specific price level has been reached. Now, the other form is sell stop limit order. It is just the opposite of the buy stop limit order. So a sell stop limit order combines elements of sell stop order and a limit order. It includes both stop price and limit price. When the market reaches the stop price, the limit order is triggered and the trade is executed at the limit price or a better one. It is used to control the entry price after a specific price level has been reached. So that is it about the forms of orders in the forex market, where we look at the market execution and the pending orders. So we have the buy limit, the sell limit, sell stop, buy stop, and buy limit orders as well. Before you leave, please do me a favor by hitting the subscribe button so that you get notified when I upload the next video. Also, do not forget to leave comments and hit the like button for the YouTube algorithm. Thank you for watching.